Hello and welcome to Capital Market live from Channels Television. I'm Will Ibang. First things first, as always, let's check in on the markets and see how stocks performed for the week. We begin in Europe, where stocks retreated on Friday, tracking cautious global sentiment as traders assess the future for monetary policy and fresh concerns about China's real estate sector. The FTSE 100 fell 0.65%. German DAX also dropped by 0.65%, and France's CAC 40 inched lower by 0.38%. European stocks on Friday look set to follow counterparts in Asia Pacific, where markets fell across the board as investors assessed Japan's July inflation and embattled Chinese real estate giant Evergrande's U.S. bankruptcy filing. Now we move over to Asia now, where markets fell on Friday as investors assessed Japan's July inflation data and fresh blows to China's real estate sector. Japan's core inflation rate fell to 3.1%, down from 3.3% in June. Headline inflation remained at 3.3%. Japan's Nikkei slipped more than 0.5% to cap off 4 days of losses. Meanwhile, embattled Chinese real estate giant Evergrande has filed for bankruptcy protection in a U.S. bankruptcy court. The company sought protection under Chapter 15 of the U.S. Bankruptcy Code, which shields non-U.S. companies that are undergoing restructuring from creditors. The Hong Kong Hang Seng Index slid by a massive 2.05%, while in mainland China, the Shanghai Composite lost 1%. Now in the U.S., stocks closed Friday's session with weekly losses as Wall Street's August struggles continue. The Dow Jones Industrial Average added 25.83 points and was roughly 0.07% higher to close at 34,500 points. The S&P 500 was lower by 0.01%. The Nasdaq Composite, however, slipped 0.2%, ending the session at 13,290 points. Shares of major tech companies, including Meta, Amazon, Microsoft, and Alphabet, continued their decline for the week. Now, back home, Nigerian stocks closed in the bear territory following profit-taking activities on all trading sessions this week, save for Friday, where it eked out a 0.4% gain. Precisely, sell pressures on Airtel Africa dragged the all-share index down 0.93% to 64,721 points. Now, the month-to-date and year-to-date returns have also moderated to 0.6% and 26.3%, but still in positive territory. On the other hand, activity levels were mixed as the trading volume declined by 3% week on week, while the trading value increased by 17.2%. Now, across our sectors coverage, where we see the insurance, banking, and oil and gas indexes declining, while the consumer goods and industrial goods indexes advanced. CWG topped the gainers chart for the week, followed by the Initiates PLC for the second straight week. And we see John Old PLC changing sides there and moving to the winning team this week. Now, while the insurance sector, however, dominated top losing stocks, led by Sunu Assurances Nigeria. Guinea Insurance made a U-turn to close negative this week. Now, the trio of FBN Holdings, Transnational Corporation, and Fidelity Bank led top trades by volume, accounting for over 576 million shares traded in the week. Now, also, if we look at the NASD OTC market, we see the index closed the trading week in the red. The unlisted equities index fell slightly by 0.12%, while the market cap was up by over 1%. And this disparity we can attribute to the listing of paint manufacturing company IPWA PLC. However, turnover was positive. Volume traded jumped by over 3,800% to 39.76 million units, while value rose by more than 300% to close at 642.2 billion naira. Aradel Holdings PLC, formerly known as Niger Delta Exploration and Production PLC, topped the gainers chart for this week, the second time in a row, while Mixter Real Estate led the decliners. And trading top trades are Industrial and General Insurance IGI, Central Securities Clearance System, and Food Concepts. Now joining me to review market activities is Mr. Ambrose Omodion, Chief Research Officer, Investigator Consultant. Many thanks for joining us, Mr. Ambrose.
Thanks for having me.
Now we're seeing the activities in the market. We're seeing the bearish sentiments going. Is the equities market, the Nigerian NGX, mirroring the general global caution we've seen for equities outside of this country?
Actually, investor sentiment across the globe are almost the same. Now that we're already in August is a very dicey month in global, world in terms of investment. Seeing the market pulling back this week, for me, I'm not surprised. Also, don't forget that we're seeing a lot of missed data in terms of macro data, some of company earnings from matured market, and down here to investors to react to this data. That's why we are seeing, for 4 days, the market was down. On Friday, we saw that the Dangote appreciation pushed the market up. But the good thing is that as we have seen inflation figure, investors are what we call portfolio reshuffling now as we speak now. That tells you that going to the week or the future, we expect that people will do portfolio rebalancing. That will also help the market to rebound. For me, there's no cause for alarm in the market.
So no cause for alarm.
No.
The market is still on the roll.
Yeah, actually, because it's not break down 64,000 mark. That is what we intend to watch. If the market is above 64,000, I tell you that there's still strength. But once it crosses it down to around 63, 64, 62, we now say, okay, what is going on? But the market is still at what we call distribution level, not yet in a decline phase. For me, it's okay.
Okay, so we're seeing the NGX this week also slamming penalties on 8 companies, FBN Holdings and 7 other quoted companies for failing to file their unaudited financial statements after the regulatory due date. This points to issues of corporate governance, doesn't it? Yeah,
I agree with you, but these companies, I think the NSC have done the right thing because they all have a press liquidity requirement that after we are listed, you have to feed the market with your performance so that investors in your company will have information to make a wise decision. On this note, finding them for me is a good one. But for NSC or NGS to quickly just find this company, whereas also the NGS itself, for me, they are not even preaching what they are teaching. They are not doing what they are preaching because, let me say so, if NSC is finding company for releasing list number, at times on NSC you can stay for 2 weeks, you are not seeing information regularly. That means I prefer that now they find them, let these companies sit up, and we expect to see more of the companies keeping to their requirements. Also, don't forget that some companies that are in that list before this finding, some of them have quickly filed up stock like Presco and others have quickly represent their numbers to the exchange, which they've lifted up. But for these ones, let them pay the fine. But I think NSC should still lead by example, but also bringing out their data on time, especially the market information that we use to analyze the market. You see, a week we close, whether you see information from NSC, but finding this company, I think it's a good one, but they too should also sit up in their corporate governance. Yeah.
Okay, so we're also seeing this. So are we saying that these companies, the fine that they're paying, is it that they're comfortable paying this fine and that's why they keep delaying it or not even filing it at all? Is it that the NGX should employ another strategy?
No, for me, if the shareholders of this company should be held responsible. Your manager that you employ, because shareholders are the owner of the company, suppose that your earnings, like earning salary, is community result or late, and now it will not be on shareholder because I tell you, this penalty will affect the finance of the company. For me, I'll tell the shareholder that these people should pay the fine because ideally, in a mature economy like US, this kind of thing, you have to find what the manager is from their salary you pay because I can't see why you delay your result. You are the manager to provide it. Then shareholders should come and not just go down and praise the companies. This is the time they should ask their managers question. Why will you allow this thing to pass the due date? Because as you are listing, you have all the present requirements. You know the period that at the end of the quarter, you have 30 days to release your result. At the end of the financial year, you have 90 days. And if you are going to half year and you are going to audit your account, you have 45 days to release your account. For me, shareholders should hold them responsible.
Interesting there. So we also saw something really tragic happening this week in Delta State. Seplat Energy's depth-wise swamped drilling rig Majestic collapsed, and unfortunately, 1 person was reported dead and 3 others are missing. We thought this would affect the share price of Seplat. Market watchers were looking out for that, but nothing happened. Can you tell us why this is?
No, this is stock that for you to change the price, you need a lot of money because for an exchange to have a law that you must trade 100,000 units of shares to change the price. And this stock is selling for almost 1,600. That means you need a huge money to change the price, either up and down. That is why the price is still stable. But if you have to be normal free market where there is no regulation, like 100,000 you change the price, I think the stock will have pulled back. But because it have that regulation that is supporting it, that is why it's still there. But for me, this company has good potential, and despite we saw a little decline in their half-year result because of the FS issue, this is a sector that, yes, we all want to be, because when you are involved in crude oil business, we know what crude oil price in the mature economy across the globe. For me, I believe that what happened is because of the regulation style of the market, because you must trade also unit to pull it up or down, and because, as I said, you need huge capital to trade that. That is why. But in terms of performance, there's no problem with Seplat.
So investors just go on as business as usual.
Because they didn't close shop.
Interesting. Now, a lot of things happened this week. I just want to run through them. It's kind of like this week was just like back-to-back activities and things propping up. Especially, we also saw NNPC Limited also securing that $3 billion loan from Afrexim Bank to stabilize the FX market and also to stabilize the local currency, the Naira. Do you think this loan is favorable in the short term to fix these problems? For me,
I would say it's a record development in the immediate. For short term, this is not for short term. For short term, you need to plan for immediate environment where you are. And so this is what the CBN was supposed to do before now, or supposed to have done before now. Let's say why. Because before you float your currency, you would have sit down, know that there's a backlog of effort that's yet to be addressed. Then what you have done, if you want to borrow from World Bank or IMF, borrow to clear that off the backlog and now continue the new one. Now that you're afloat, you see how the market is so volatile. If not, the NNPs have come forward to rescue the federal government and CBN, and that is why I say it's a good development for me. There's no cause for alarm. We can see that again. We have seen that another law is coming for another kind of initiative. Now they are calling back the ability to change again in the same of to manage the FS market. It tells you that despite the idea is good, to unify your exchange so that we'll stop this having those that are going to make our paying different, those that are important, those that are friends to the president who are paid. It's a welcome development board. I think there's no proper planning or thinking before they went ahead. For me, it's a welcome development board. Now that we're seeing some little policy somersault, I believe that now that they're taking steps for immediate solution now what is that the ministers are coming on board to form executive council. I believe that it is time for them to have short-term, medium and long-term plan on how to make this market stable so that you can attract foreign investors and also save our companies that are importing the raw materials and machines to come up, because I tell you, the exchange regulation have affected a lot of manufacturing companies. That means only the service sector are likely now they won't breathing. But for those manufacturers to bring in your machine, bring your raw material, you are paying from your nose. Also, the leather is not available. But now that we are taking this move that, yes, the ability to change should come back, and now you now set a range for them, a limit of 2.2. Well, for me, it's a good development that we have started from the one you lift up the unification. That would have been the first thing you would have done there. If you're calling them back now, we'll not see price running from almost 700 to almost 950, 985 coming back. I think they are coming back now to that's why when you bring up policy, you study it. Now you can now make little adjustments. Now they are making adjustment. Now we have seen $3 billion from NNPC through Network Bank. Now they are bringing another range or kind of a circle that for me is a good one for now. But let's see more plans or more strategy that they'll bring or policy that will drive it. But I know the first they should do that for you to attract foreign investors into this country. Our exchange market should be stable, and we can now focus that in the next 1 year, next 2 years, the difference between the dollar and naira will be between this range of 2.5 to 2. That will be okay for us. It's a good one.
Let's talk about the immediate impact this $3 billion and the bringing back of the Bureau de Change has done, and the FX intervention in the market did to the dollar and the naira. Could you just tell us what we saw? Actually, speculators did lose in the market.
Exactly, yeah. Don't forget that when they were interviewing the Minister of Finance, exactly now, they are giving a purpose. He said those that are holding FS is going to regret, because they thought that it's going to 1,500, 1,000, that the real value of our currency or naira is around the 700. That's what he said. You can see that immediately they just brought the $3 billion. You can see that that's the market at Black Bank full price pull back. It tells you that if we can sustain this and we sustain stability, we'll go back to 700 and 750. That will also be better for people that if it's moving to 800, 900, 1,000, it's already affecting your plan. But if it's stable, you can forecast and do your business. But also one thing to make clear that let us the government know that this is not a dollar economy. I always say that Nigeria is not a dollar economy. We use naira. Why is that? Even the man on the street wants to tell you the dollar is up, because everybody is taking dollar as as a benchmark now. That means we should encourage backward integration and also make sure that our naira has value so that people looking away from dollar and spend naira, because it's like everybody in Nigeria is spending dollar, which is not good for economy.
That's very interesting, and we're going to keep talking about that. But right now, we're going to take a break. Capital Market continues just right after this break. Do stay tuned. Welcome back. If you just joined us, this is Capital Market Live from Channels Television, and we're reviewing key market events and how they affect your investment portfolio. Mr. Ambrose Obodion, Chief Research Officer, Invest Data Consulting, is still in the studio with us. Mr. Ambrose, in the face of the ongoing economic reforms and the changing trading environment, what advice do you give to investors? How should investors, or what should they do next to be able to profit from this market?
Actually, the first thing is that as an investor or a trader, you have your investment objective while you're in the market. Now, that objective will help you to have your trade plans. That trade plans also help you kind of stock will buy into your portfolio. Already, if you are in some stocks that, as we are seeing, they have fair result, because half year result is as important as almost a third quarter and also full year result. As the results are coming now, so what is happening in the macroeconomic space? We are seeing that the fundamental of the economy is changing, and at the same time, I believe that investors are looking at these changes in the economy because you want to look at mirror what is happening really in the economy now before taking a decision. We have seen that numbers have shown that with the new FS policy, some industry or sector in the market have been affected. We see them posting a red figure as a result of that, and some sectors are putting a very impressive and surprising number also. What you do, you don't have to represent your portfolio as an investor. Know the company that now you have seen the results. If you are in those portfolio that in those companies that are putting negative results, yes, markets are responding, their prices are declined. Now look at the sectors where there is potential for them to grow their earnings power. Then you now start investing, because we have seen the half-year result of this company. You can easily forecast their full year, what they're likely to come as well as dividend. And also because prices have gone up, the dividend yield of these companies are gone low. Then it means that companies that want to pay higher dividend must also earn what? More. I mean, those companies, we see that in their top line and second line, bottom line, we have seen impressive performance. That is where we be keen as a result of what ahead, because every investment against the future. Now, we call it a service sector. If you look at the banking sector, insurance sector, and also this aviation service sector, and also the non-financial sector like UCAP and consider an ally investment, it tells you that these are companies that when we check the result, we saw that from the insurance company, because of the new rule that came from the regulator that increased the premium by 200%, it's already reflecting on the bottom line and top line of this insurance company, and their prices are low. And if you look at last year, so we saw that most of these insurance companies pay dividends. That's why they are still bookable. But now you are seeing what will drive the earnings of this company that will prove their earning power is this premium. Don't forget that before people are paying just 5,000 naira for third party. Now you are paying 15,000 naira. Also, it has been extended to other fleet of transport business. That means most of this company, insurance company that has a composite insurance, are making good money. That means at the end of the day, we want to see a better picture, because it has shown their first quarter, second quarter. And I tell you anywhere that when you see a company earnings trending up, it's a sign that trending up will support the price to go up. And also that will support what they pay out at the end of the day. This is how investors should invest now. Those companies that are going to keen, look at their P ratio before you start buying them. And those companies have seen that, yes, they put a negative number. Until government is able to solve this FS problem, they'll still be struggling. You sell off your position there, move to where you see that is possible. Because I tell you, in any market in the world, even when there is uncertainty in the market, there are sectors and industries that provide opportunity. No market will go down because there's uncertainty in the industry will benefit from what is happening. That is how to mirror your investment. Move to that sector for now. When you see that the other sector are improving, you come back and invest. That is why you must do what we call sector rotation, to move to one sector to the other, looking for what opportunity to make money. That is why you are in the market.
You know that investors do not trade in isolation. There are factors they have to consider. So how should fiscal and monetary policies, decisions influence market players or influence the decisions in the market? No,
actually, anywhere in the world, once there's hike in interest rate, it's going to affect flow of funds. Why flow of funds? I say that because fund will now look at where you make more return with less risk. Here now we'll move our interest rate with the MPR from 18.5 to 18.75, 15 basic points. Automatically, it tells you that
about 25 basis points.
It tells you that the fiscal market will gain from it. What happened? Immediately after that, the next Wednesday, we saw that movement from almost 6.4 5 in Treasury bill, 364 days, to almost 12.15. Market started reacting to it. And funds started leaving the capital market to physical market, because now the yield is up. And there are some companies in the capital market will not give you 10% yield, dividend yield. But we are getting almost 12.15 yield. Fund left the market for them. But the next last option now, we saw there was a decline too. And since that decline, because the funds also coming back to capital, that means fund is being driven by what? By interest rate. That is why in any economy, there are 3 basic things you look at to know what to invest. You look at what is inflation doing, what is the interest rate, and also what the economy, what we call industrial output or national output, the GDP. If the GDP is going up, interest rate is going up, and you see that inflation is coming down. Tell you that we're already at what we call the end of the expansion. But if we are seeing a low interest rate, a low inflation, and we are seeing improved output that we're already at the late expansion, that will take us to middle expansion. But when we see that inflation is high, as seen in Nigeria today, interest is high, and we're seeing that even our national output is declining, tell that we're already in contraction. That's why these common ministers and the executives need to think about already that economy is contracting. It's not expanding. Despite that, our GDP is still positive, but it's not even we're not growing our GDP. That's why investors look at all these, and those companies those sectors that supported growth in GDP, it's also where you should be looking at. Because in GDP, we saw that the management sector, financial sector, telecom contributed positively. That means, as an investor, that also guide you that this is where you should put in your money at this time. All this data comes to open your eyes where you should put your money. As inflation is moving money around, also the GDP that comes there, which sectors supported GDP, that means which sectors are doing well, you start keying to that sector at the same time.
So if earnings count in any market cycle, so what should investors be doing with the half-year corporate earnings scorecard? For me, this is a good question. For me, look at the company that has good earnings. Look at the earnings as we speak now. Do a focus of 2 quarters. Already, we have seen the half year ended June. Now you can see that we have another 2 months ahead to end the year. Already, we are more than half of the 3rd quarter already. We know what they've done. You can forecast the full year. You start buying. That's why I said earnings speak, as you just said, in any market, either in a down market or up market, because this is what price feed on immediately. Apart from the liquidity in the market, which is general, or the policies affecting in the sectors positively or negatively, the company performance is very, very key. If a company has 20% influence on the price, now that we are seeing that they are doing well, it's time for you to realign your portfolio in that direction that companies are performing well ahead of their end of the year. But now we're saying that we're expecting to see the first-year banks, which for me is a catalyst also for the market. If it comes, because if I look at the results for other banks that have released before now, I see that all of them have recorded what we call exchange gain. That exchange gain is going to happen on these first-year banks. And if that happens, we expect that the first-year bank will know their payout pattern before now. But if the kind of earnings we saw other banks posted in terms of performance, profit, we expect them to grow their payout. If they kind of deviate from that, it will be a slowdown for the market. But if, like, let's for example now, for like GT Code that pay 30 kobo, move to 40 kobo, Zenith Bank that pay for 30 kobo, move to 40 kobo, Access move from 20 kobo to 40 kobo or 50 kobo, that will change the psychology of the market. Meaning that anywhere in the world, the financial sector that drives the economy, because that is the engine of any economy. When these results come, will change the face of the market. So interesting. So what are your stock picks for the week? I'm sure everybody wants to know where they should put their money, where they should be, what corporate earnings they should be looking at, and where they should be putting their money. So what
I said that
trade or fade this week?
What I said earlier is that it's time for them to realign themselves to what service sector, that where we've seen positive number. That means those maturing sector like Cabri, all those that have seen negative number, but it's going to remain until you're able to solve the FS problem. Move your portfolio to stock like GT Code, Zenith Bank, NACO, Massad Insurance. All these are stock that, because the sector, that they have something that is going to drive their earnings power. For that is where it should be.
Thank you so much, Mr. Ambrose.
Thanks for having me.
Right now, we're just investors out there. Just take it to the market and say, oh, I want to invest in the market.
Yes.
And we're going to struggle for a long time despite the FX issues.
Exactly, yeah.
So thank you so much, Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Many thanks for your time this
Thanks for having me.
So finally on the program, let's bring you some of the key expectations for Nigeria's capital markets in the coming week. Developments in the macroeconomic landscape and the movement of yields in the fixed income market are expected to influence investors' sentiments in the medium term. At the bonds market, traders expect yield in the bond secondary market to remain elevated in the medium term driven explicitly by expectation of a sustained imbalance in demand and supply. However, deliberate actions by the DMO to keep the cost of borrowing moderate remains a downside factor. Over to the Treasury bills market, where analysts expect lower yields in the Treasury bills secondary market as the anticipated inflows into the financial system would likely fuel bargain hunting. Also, market focus is expected to be shifted to the NTB primary market auction scheduled for Wednesday, August the 23rd, where the CBN is expected to roll over 303.22 billion naira worth of maturities. And now for the money markets, we see the overnight lending rate is expected to trend lower next week as analysts believe the inflow from the bond coupon payments will help boost the liquidity in the system. And lastly, at the equities markets, mixed performance is expected from investors as they rebalance their portfolios following assessment of half-year corporate earnings released so far. And that's it on Capital Market. Do join us same time next week for another edition. Don't forget you can watch this again on our channel's television page on YouTube. Also follow us on other social media platforms to get updates. I am Will Ibang. Bye-bye for now.